Hey guys, and welcome to this video introduction for the PipsMatter reversal tool. So this video is all about the PipsMatter reversal tool, which is the 30, 45, 60 reversal tool that we add to the Fibonacci expansion or retracement. Anyway, I'll explain this now. So I'm going to go over how to use the tool, when to use it, and I'll also go over how to incorporate this tool with other tools and weed out the trades in order to find the best possible entry signal. Now, my goal with this video is to teach you the following: how to use the tool, when to use the tool, how to incorporate the tool with the EMA, DC, key trading levels, and even patterns. But mainly, what I want to do is to teach you to understand which levels to use and when to use them. This video is going to be very interesting. And as with every video, I invite you to ask me questions. Preferably when you're asking questions, I want you to ask them in the comment section on River so other people can learn from the answers I provide you to. At PipsMatter, we're a trading family, so it is in our interest for everyone to grow, learn, improve, and absolutely earn. I hope you're excited to learn more about this magnificent tool. So, let's get started. Now, the PipsMatter reversal tool can be applied to your trading terminal by using the Fibonacci expansion tool and changing the percentages it uses to our own numbers, which is the 30, 60, 30, 45, 60, and then 120, 150. I'll explain all this. So we use the PRT, which is the PipsMatter reversal tool, to find reversal levels and thus find better entries, find stop out areas, find take profits, and to add on to our trades, basically compound. The tool can be very effective if applied correctly, and mainly of the traders at PipsMatter, and mainly the traders at PipsMatter that have used it correctly have predicted some pretty big and very impressive market movement where they capitalized on this and generated impressive returns. So, without taking any more time out of your day, let's head straight to the charts so I can show you exactly how to use this magnificent tool in your trading. I need you to make sure that you're going to be paying very close attention to this video, and if you don't understand something, simply just ask and you shall know. Let's head into the charts right now and we'll come back to the PowerPoint. Okay guys, so we are at the chart. Like I said in the PowerPoint presentation, we will be taking care of 4 points in the charts. First, I'm going to teach you how to find an entry. Second, I'm going to show you how to set or basically find an exit area. Third, what we're going to do is find our TP, so take profit level. And finally, fourth, we're going to look how to compound. Now, like I said, I'm going to start releasing more and more videos from the breakout strategy. So the next trade I find, I'm going to release a video and explain why I'm taking this trade and things like this, so you'll be able to learn all of this much more. But this video is specified for the reversal pattern. So I'm going to go over Euro USD, Euro JPY, gold, and an exotic pair here, USD PLN, which is the Polish zloty or whatever it's called. So, Euro USD. Now, look, you can see here a nice head and shoulders pattern. You can see the key support area being this level here, right, the white one. If I zoom out, you'll see this better. You see this top right there is at the 16 area. So hence the reason this being a very strong support level. But we have this, this resistance level here that's kind of keeping price intact so far. You might be wondering, why am I showing you this? Well, I'm showing you this because it's not just important to use the reversal pattern. It's important to use all of our tools, the DC and EMA, trend lines, patterns, and then of course the reversal tool. So there is, everything has to go into a little box, and all of this little box should confirm to us whether or not we should be entering a trade or not. So, for the sake of explaining you all of this, I'm going to show you exactly how to use the reversal tool on CTrader. You're going to go over here, and you're going to go to the Fibonacci expansion. So, what you're going to do, for you to understand how to use it, is you need the top, and I'm going to clean this white level so you can see what I'm going to mark. So you need the top. There is a top right there. So price came, reached the top, and kept going down. Top is clearly certified here, and let's say you're trading, you don't have a trade open, you're waiting for the bottom, there's the bottom here, price continues going higher, okay? So when price creates this bottom here and has this stop already, what you're gonna do is you're gonna click and drag down here, get the bottom, and then go back all the way up there and do this, okay? So right now you have the top, which is here, and you have the bottom, which is there. You can even use this bottom here, it doesn't matter, both of them are fine. So either the bottom, preferably, actually let me make this clear. Preferably you want the bottom, not the low, and you want the top, not the high. So this is the high, you don't want the high, you want the top. The top is right there. You don't want the low, you want the bottom. The bottom's right there. You can see price clearly acting as a support level right there. So what you have here is, let me show you 1 second. So I'm going to make this a bit thicker so it stands out, and I'm going to change the color of it. I'm going to change it to red because I have nothing red here. So now you have 3 levels here, right? You have the 60%, you have the 45, and you have the 30. Okay, so price came to the 60. Now we had the support level here, which is the EMA as well. So the EMA was the first support level, and this could have been classified as a good level, and it probably is a good level. And it probably, well, you can see that price reached it for the day, stayed there, went a little lower, and then made a new high. So how do you know when to trade this? I'm going to explain this in a little bit, but let me explain how you're going to find the perfect setup. So if you were to enter at the 60, which is the first level, and there is still 2 more levels to go, the 45 and the 30, the 60 is the most aggressive type of level you can enter for a sell, okay? So for a sell, that means from up to down to up. We get the 60 level, we also have the EMA here. This would have been counted as a good area to enter. I'm going to summarize it quickly and then slowly explain everything. So if you were to enter at the 60, which still was a good indication because of the EMA here, which has clearly acted as a support here and here and here, you would have put your stop loss above the Dow chain channel, which is right here. So you would have put it above it. Now if you were to enter here, the Dow chain channel was there, your stop loss would have been probably up here. Taking into account these 2 tops here, you would have also made a trend line, okay, with the tops. So your stop loss should be above 45, even above 30 preferably, because that's the last stop out level, and you would take your sell. So you would have probably made good money, better risk reward. Even if you were above the 30, you would have still made 2-2 easily. But let me explain this better. How did we know that this is a better level? Because we have the Dow chain channel. The Dow chain channel is our last level of resistance and our last level of support, because it's always at the bottom as a support, and then it's on top as a resistance. So the 45 would have made much more sense here. Of course, you know, that doesn't matter right now, but I'm just trying to explain this in a better sense. This is how you would use it. You would need the top, and you would need the bottom, and you would need that bottom to be clarified. You don't want to create it straight away. When you see price start going higher, such as this candle here, that's when you look at this and you say, okay, there's a bottom, there's a possible reversal in play. Why are we looking at this as a reversal? Well, because we have the left shoulder, we have the head here, and a possible creation of the right shoulder. So how did we know that the 45 is the best option? Because if I take the 45 and I go here, I have the resistance of the left shoulder, and then I go here and I have the right shoulder. So this would have been a really good trade of the 45, because what are we doing? We have the trend line, we have the DC, we have the 45% level, and we have the shoulder being created. So resistance, support, 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 resistance. Excellent trade idea. Excellent. And I'm pretty sure you guys who's with me for a while, this is Euro USD. You've seen me call this one out. So let's go into something else and try and explain this a bit better here. Okay, so this is Euro JPY, again the daily chart. Also try and use this only on the daily chart. It's much better when you do it on the daily chart. So let's go over this. Let's go over this by cleaning this chart quickly. I'm just going to leave the trend line in there. So here we go. So we have a trend line here that's connecting the bottoms, and this here, and then the breakout here. So look at this. Support, 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 breakout, resistance, right there. Okay, perfect trend line. Now how are we going to do this? So we have the bottom is there, right? Somewhere here is the bottom. How do we know the bottom's there? Well, because if I do this, you will see support, 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 right? And then we have the top over here, right? So what we're going to do is we're going to get the day before candle and go down here to this day and go back up. We can even put it here. So what do we have? By doing it like this, these are the following levels we get. We get the 60% here. Let's just change colors to red. We have the 45 right there. Okay, never reached. We have the Dow chain channel, the EMA, and finally we have the 30. The best bet was, of course, entering around the 45, but since we have this level here, then it's pretty simple to understand that yes, we are in fact going lower. Well, because we have the Dow chain channel here can be broken and the trend line. But look at this. We tried it like this. We got these levels here. You can see that price reached the 60 here, exceeded it a little bit, not by much at all, 26 pips. Euro JPY, that's not a big deal because the daily candles are huge. Look at that, hundreds of pips in a daily candle. So even if you entered at the 60, you would have still been quite fine because your stop loss would be on the next level or the level above that, depending on how you're going to do it. But since we have the bottom as well there, you can also do this, you see? So now it adds up much better. 45% is right there, right? But the bottom is not there. The bottom is here, and that's what we're following. We're following the rules of the system. You can always try and make it look better and try and make it fit in, but you know what? The lowest level price went was here, so that's the maximum I wanted to put it at. I don't want to try and make it fit perfectly. I want it to be right. So breakout here, price movement clear. So we went from top to bottom and we found these levels. Now if I leave it like this, you'll clearly see that this level is the resistance, resistance, resistance. Euro JPY is in a ranging mode here, but there are very good chances that it will break out from this area. How do we find our take profits? Very simple. So the 30, 45, and 60 are tradable. These are the tradable levels. The 120, the 150, the 180, and the 210 are take profit areas, and here they are. So your take profit level 1 is here. Now let's see how this adds up. Let me show you just for you to see how powerful this is. So here's the 120. You can see it add up to these key levels here. If I go on the 150, you will see it add up to the next level. There, this one here. Okay? So there is always some key level that it will interact with, such as here. See this? And then down here, another one. You see? So these are all key support levels. It's just up to you how much you think this pair can go down. Now mark my words here. Today we have the 13th of November 2013. Euro JPY will continue going lower. Why? Trend line, bullish trend line is broken, retested. We have a nice reversal here at the 60% level. Very nice reversal. Even at the 45 it's okay. The DC is still not broken. Price below EMA. We're good to go. Very soon Euro JPY will shoot out of this. And my target, to be honest with you, is the 210. I think it will reach that level. So let's go to gold and find the bullish pattern here. Now, if I go in the past, I can find many reasons for you to keep buying these dips and selling the tops, and it's all over the place. But I'm not going to be doing that. What I want to do is show you exactly how this could work. So if we're looking for a downside move here and checking for any resistances, here is the top, here is our bottom, even here is our bottom, and we do this, and we see the price is finding a strong resistance at the 45% level. But pay attention to the yellow line. You can see that it's a strong support level. Strong support level. So the 30, the 45% did act as a resistance here. Some easy money could have been made, but I still believe it's going to go higher. So if we go down to the 4-hour chart and try and find a more specified entry on this one, I'm going to show you what's going to come up. So we have the bottom. Let me just remove this. So we have the bottom and we have a top over here. So if I take price action from the bottom to the top and back down, you will see that price used the 30% as a support, the final level. Now if you're trading on a 4-hour chart, you want to try and focus more on the 30% more than the other levels, but they're still quite important. So I can tell you one thing's for sure. If gold manages to break this level here, which is the 60%, and ironically the 30 and the 30 EMA and DC are right there, well, then you're targeting the upper levels. And there's your day trade, possible day trade with possible nice levels and possible nice moves. Finally, I'm going to show you the same thing on USD PLN. We have the bottom over here, we have the top over here, and we have the 45% level, right? The top is right there. You can see here, top, 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 top. The bottom here connected with these bottoms. You can also see this trend line supporting this possible head and shoulders. If I zoom out, you'll see it even better. Shoulder, head, shoulder, right? That's the head and shoulders pattern. We have the trend line supporting the bottom move here and these moves here. Don't forget that this is a gap down, so we're ignoring this here and we're connecting this. And we have the 45% connected right with the trend line. This, my friends, is an excellent buy. So that's how you find an entry. Maybe I didn't explain it very well, but hang on for a second and I'm going to explain. I'm going to break things down into pieces so you understand everything fully. Okay, so finding the right entry is pretty simple. What you want to do is, for a sell trade, you're going to be using your Fibonacci expansion from up to down to up. And for a buy trade, you're going to be going from down to up to down. Okay, so that's what you're going to be doing. Let me explain this well again. For a sell trade, you're going to drag, click, drag, drop, and drag up. That way, what you're going to see is the 30%. The 30% will be the last level here. Let me show you. There you go. The last level is 30%. The middle will always be 40, and the first level it reaches is the 60. But however, on the buy trade, which is here, let me just change the color so you see it better. Which is here, you see that the 30% level is first, second 45, and then 60. Okay, so that's how it is. So pretty simple. Now look at this. If I take the top, regardless of which one I'm getting a level, either 45 or 30, price is coming closer to the 30% range here. Very good buying indications, and you can see a very, very good trade right there. So 45, price closed around it, never broke the 30%. Perfect trade. You buy somewhere here around this area. Your SL is somewhere around this area, TP around 120, 150, or even 180, as you can see clearly reached. This is a big, big move. So if you were to enter at 45, you could have made either 245, either 347, or 443. So these are big moves. Big moves. This one is actually being played out right now, so we're expecting price to drop back down. To be honest with you, like I said, I think the 120 could be reached. I really think that 120 could be reached on Euro JPY, but you know what? I'd settle for 150 or 180. I'd totally settle for one of these two levels, especially 180. That's a big move. Even if you just enter it right now, you're looking at 245 pips. I mean, I'd take that on any day. So that's for the entry. What you're looking for is, and let me clearly explain this, you are looking for some kind of pattern, especially indications of a trend, such as here. Price is going higher, created a top and started going lower. Obviously, what's in moment, you guys know the law of gravity. Oh, how do I say this? I forgot. Anyway, things in motion tend to remain in motion. That's it. So, unless acted upon by outside force. So something happened here, you see, and that's causing us to believe that Euro JPY will go down. You guys know the reasons. Euro's weaker and so forth. But anyway, the trend's up. Price creates a top. We have the bottom. Once it's on its way down, we find these levels. Play around with it a little bit. Go on the 4-hour chart and look at it a bit better. Here you go. Look at this. So this is the selling side. So you can see the bottom here is even better. Now let me show you how this would look if we done it on the 4-hour chart instead of the daily. And look at this. 4-hour. There's the top and there's the bottom, right? And there's the 45%. Literally touched it. That's your selling. That's where you sell. Here you want to tend to ignore the EMAs, okay, EMA and DC. 4-hour chart, try to ignore them, especially on volatile pairs like JPY. But generally, this works. So let me show you down here. Same thing. So there's the top, and let's just check out our bottom. Here is our bottom. You can see it right there. That's our bottom area. And let's see how this worked out. Here is our top. 45%. Look at that. Look at that. If you were to buy here, 20 pips you would have been in a negative. And then boom, look at that. Boom. So if I may advise you, or well, I definitely, not may, but I should advise you, review the charts on the daily, find key setups, find possible levels, move down to the 4-hour chart, fix the reversal tool well, make sure it connects to key areas, such as here. This is the clear bottom, but on the daily chart it doesn't show it like that, but on the 4-hour chart it will give you much better information. Do that and then you move over to the next one. So look at this now. So now we have a bottom here, 45%, right? We have this bottom and then we have a top up here. Let's see how this worked out. Boom, 45%. Barely touched it. Barely came to it and boom, continue to the next level. So as you can see, this stuff really works. Really, really works. And you can even do it for smaller movements, such as here. You can get this bottom, this top, and there's the 45 here, not being reached. Hasn't been reached, but still a possible trade idea somewhere around there. Then you have this perfect trade idea here, 45, and goes down. So that's how we find an entry. Like I said, we go from the daily chart, we move down to the 4-hour chart. When do we know that we should move? Well, I guess it will take you a bit of time to understand this, but sometimes this won't work out. Also remember that no system is foolproof, but this stuff works and can make you a lot of money. Let's take this example here. So a smaller example, let me just mark it up. So this is a smaller example right here. Like this is definitely the 30%. Like, I mean, you will get to see this stuff without even looking at them later on. So the top, as you see, is also there and there. So we get the top over here, 30% is there. The bottom a bit lower, no, there. Anyway, very close to the 30%. So let's say if you were to have entered here when it reached the 30% with a pending order, you would have been again in a very small minus, but your TP 120 would have been reached numerous times. So yeah, anyway, that's how you find an entry. If you didn't understand it, ask a question and I'll explain. Let's move over to the next one, and that's how to find an exit. Okay, now in regards to the exit, well, the exit is pretty simple, but let me explain to you if you are entering at the 30%, because there is nothing after it, just the 30% and that's it. Well, what you would be doing for your exit level, there are two ways of doing this, and I'm going to show you one of them right now. The first thing you do is you calculate the distance between the 30%, okay, between the 30% and your first target profit, which is the 120. In this case scenario, gold, 30% to 120, the difference is 1,813 pips. That means that if I am to receive a reward of 2 for the risk of 1, my stop loss cannot exceed 600 pips. So that's what you would do. You would calculate the top, only the first level, you can't go to the second or third, the first level only. Put your stop loss at 600 pips, which would be this area here, and then target the area there, and that's it. You have a risk reward of 1 to 2. That's one way of doing things. But let me show you another way of doing things, for example, on Euro USD. So, because we are selling on Euro USD and we're looking for a sell trade, let's try and actually grab market action right now. So let's go down to the 4-hour chart, and what we're going to do is we're going to take this top over here, okay, and we're going to try and connect it to two of these bottoms. The first one is this, okay, there's the top. So what I'm going to do is I'm going to just quickly draw a line here. Oops. And then I'm going to connect this to this line so I can see better. So the first thing is this. Right now you can see Euro USD 30% level here. I'm pretty sure I'm not going to be moving it to the next bottom, which is this here. I don't want to do that because I guess this just is at that area. The white level, if you remember here, is the support resistance level, so I'm fine with that. Now, let me actually clean the chart a little bit so you guys can see all of this better. Okay, so this is the 4-hour chart. Remember, we are ignoring the EMA and DC here. We're only paying attention to it on the 1-hour chart. Now, the 60% level is here. Let's say, for example, you want to enter a trade. You want to enter a trade here, and let's go on the daily chart just to look at this, for example, for a quick second. So the 60% is here, clearly acted as a resistance so far, and then we have the 45, which is at the DC and EMA, and then we have the 30, which kind of adds up with this top trend line, but not that much. But yes, it's somewhere there. Anyway, let me explain this better. Let's say you want to enter at the 60% level. Here's your entry. Your maximum allowed stop loss would be above the DC, which in return is above the 45% level as well. So it's these two levels. That means from anywhere from 55 pips towards 90 pips, that's how big your stop loss should be if you enter here. Because you're targeting above the DC, always above the DC or the EMA, preferably whatever is on top. In this case scenario, we have the DC on top. That means from here till here. I don't know how big of a position you're entering. This all has to do with your risk management. So I can't tell you exactly where, but I can give you predetermined areas of where you could get out using the reversal tool. As you can see, for selling, I can do it. In that case, for buying on gold, I can't do it because it's already at the 30. Okay, but I explained to you in case you're buying at the 30 or selling at the here, for example, if you're selling at the 30 or buying at the 30, then you have to measure it based on this. So let's say if I'm selling at the 30, which is all the way here, I calculate this 230 pips. That gives me a stop loss of what? 115, right? Yeah, 115. Maximum stop loss, 115. That's a maximum stop loss. Remember, that means that if you're going to be opening a bigger position, that means you need to lower your exposure, of course. Right? You guys get this. Risk management is important. I'm just showing you how you would be exiting a position, how you would be setting up or finding an exit. I hope I explained it. Euro USD, good entry here. Small stop loss, guys. It's not going to be a big one. Even if you enter at the 60%, look at that. Anywhere from 55 to 90 pips. That's nothing compared to a reward of 150 or more to 60. That's big rewards. So yeah, anyway, this looks good. Like I said, what you're targeting is either the next levels. If there are no more levels above and the DC and EMA are below price and you want to sell, then like I said, you check the 120 and then cut that by 50%, and that's how you could put your stop loss. Now, let's move over to the TP. Okay, so we're back at the Euro USD chart. Same thing goes. Here we're selling, for example. The TP is quite simple. Guys, it's extremely simple. So you just have to add in the numbers 120, 150, 180, 210. Then it's up to you to decide which level do you think will be broken based on what kind of pattern or move you're trading. In this case, we have a few-year high. I mean, this is the highest Euro USD has gone since the last 2 years. And now we have a head and shoulders on top of it. This indicates massive bearish momentum. So that means 210 could easily become a target. Okay? So that's what you're targeting here. What you're looking at is 120, and then you want to see. You can mark this out. You do this, and you just check which levels have acted as the biggest resistance or support in recent times. The 210 is a clear resistance here, and then a support. The 180 is a support here, and if we go into the past, probably they are resistance, and then this one here. They all add up magically and beautifully. You see here, then this one's here, and this one's there. They all add up, and then you just have to decide which one you're willing to go for. The easiest thing to do is say, I'm going to go for 210 and I'm going to become a millionaire. Well, it's really hard staying in those trades because very easily price could reverse at 120, 150, 180. Before it comes to 110. So it could take a long time before it reaches that area, or in some cases it might take a day or two. What you need to remember is that every single trade is different because of the patterns and the fundamentals that are involved. So you guys know the analysis process. gather all the facts, gather the information, then make an executive decision. Take profits are quite easy. Now, let's go back to the PowerPoint. I want to talk about something else, and then we'll close this session because it's been quite a bit of time. Okay, so in this session, I actually won't go over the compounding because it's a little bit more complex, and I don't want you guys to start to use compounding so much, especially in the beginning. So I will be creating a separate session for that. But for now, I do want you to remember a couple of points, and there are just 6 points. Take them home with you. Make sure you remember them. 1. Review the charts on the daily chart, but find a confirmation on the 4-hour. I explained why in the video. 2. Make sure you know which markets you're trading. Are you trending up? Are you trending down or sideways? Make sure other tools agree with the reversal tool. The DC, EMA, trend lines, patterns. The more, the better. Okay? The more indications you have of a specific move happening, the better. If you are selling or buying at the 30% level, which is the last level you will get, calculate the distance of TP level 1 and the 30%, and then cut it in half, and the number you get is the maximum allowed stop loss distance you can have on your trade. The percentages, the entry percentages are 30%, 45, and 60. They are just entry percentages. The take profit percentages are the 120, 150, 180, and the 210. That's pretty much it for me. Thanks you for watching. Here's a big thumbs up for you. If you have any questions, please put them in the comment box on River. If you want to ask them in a different way, you can ask them on email, dennis@pipsmatter.com, or Skype, dennis-matters. That's pretty much it. Thanks for watching. See you later. Happy trading.